Hi, I'm Chelsea from Bezla. Hotel investments have become increasingly complex in many areas, ranging from the structure or format of actual hotel ownership to the terms of contractual agreements to investor reporting requirements. This growing complexity has spurred the development of specialty expertise in the management of hotel investments. In the case of real estate syndications, knowledge and experience with limited partnerships and the related issues of general versus limited partner rights and responsibilities are required. Similarly, REITs require expertise in the various REIT structures, supporting documents, regulations, and public reporting requirements. The asset manager is typically responsible for managing property management and franchisor or licensor and lender relationships. Each of these relationships must be managed in accordance with the terms and conditions of individual contractual agreements. Contractual agreements themselves have become substantially more complex, owing to changes in hotel investment and debt capital structures, and the increased sophistication of the parties involved, including, among others, owners, managers, franchisors, lenders, and investment bankers, and other financial intermediaries. Reporting requirements also have become more complicated, particularly in the case of public forms of hotel ownership, where investor reporting requirements are often dictated by regulations. Over the past decade, many passive investors fled the hotel sector and were replaced by growth-oriented companies with aggressive profit goals. While some passive investors continued to invest in hotel assets, changes in tax laws, coupled with the increased complexity of hotel investments, prompted many banks, insurance companies, and other passive investors to leave the investment arena. As the profile of ownership shifted from a passive to an assertive nature, achieving investor expectations became more challenging and more demanding. Investors, more than ever, expected hotels to be prudent investments with competent management and strong earnings. Growth-oriented companies engaged investment underwriters who would approach acquisition opportunities with a renewed focus on the underlying fundamentals. While the acquisition process represented the initial strategic outline, it became increasingly evident that asset management would bear the burden of implementing the strategies to reach those objectives. Maximizing the return on investment of a hotel asset has become a more contemporary definition for hospitality asset managers. Over the past 10 years, investors, by and large, have become less passive and more sophisticated than the investors of the 1970s and early 1980s. The investments are more complicated and, because of sharp increases in hotel supply, there are many more hotel investments to manage than ever before. Investors seek management that can produce acceptable returns and value enhancement within the context of a best practice environment. Asset managers are widely deployed as fiduciaries and have clearly become the champion of the investor. If Bezla could be a service for your hotel marketing, call us at 888-999-8086 or visit us at bezla.com.